Flames flicker on the stone, ancient charts in amber glow. No crown of gold, no gilded throne, just ink and time and what I know. Hush, all the wizard speaks. Good exit rules, guard well the keep. My plan made clear, I shall not fall. I live to trade another dawn. When taverns roar of dragon games and reckless knights boast gilded chains, I sit, I wait my time, I bide, for markets turn like shifting tides. No crystal ball, no gambler's plea, the market moves, I govern me. The scroll of price unfolds its truth, timeless rules remain my proof. For kingdoms fall in frenzied cheer when greed outshouts the voice of fear, but steady breath and tempered hand outlast those in a doomed last stand. Hushie, all the wizard speaks. Good exit rules, guard well the keep. Your plan made clear, you shall not fall. You will live to trade another dawn. Three losses dealt, then sheath thy blade. No reckless war shall here be made. Close the gates, still the hand, and wait until your rules command. The trend your steed across the plain, your stop a shield against much pain. Risk but little, press when strong, for patience makes the fortune long. Not prophecy nor mystic sight, but discipline that wins the fight. For the gold is not in daring loud, but quiet strength when fear is proud. The tide obeys no king nor crown. It lifts men up, it casts them down. Yet calm within the storm we stand, with measured heart and guarded hand. Hushie, all the wizard speaks. Good exit rules, guard well the keep. Our plan made clear, we shall not fall. We'll live to trade another
Good morning, y'all. All right, so here's a plan. Total chill vibes, okay? This is Chris in work mode. I have the studio lights turned off, so you're just getting the natural light coming through the window. I will most definitely be interrupted with children every once in a while. They were in here just a couple minutes ago. But we are going to do some major work today. I have my Brain FM going on in the background. I'll turn on the sound for a second so you can hear it. It's going to sound weird. Just get ready for this. Hang on. Okay. So that's what I can hear in the background. Um, we're going to be going through a lot today, like a lot today. I plan to be here for hours. Um, this is actually my job, so this is easy for me. But I started making a list. Where did it go? Word document. Started making a list of the objectives for today. So whenever you are backtesting, the number one thing you have to do is what are you doing? Right? What are you doing? What is your plan? Okay. So we can add theories. This is a working document. We can add theories to this. We can add ideas to this. We can add our findings to this. But first we need to set some objectives. Right? What is the objective? Um, And then as we go, right, we're going to have outcomes. Objectives and outcomes are basically the name of the game. What are we trying to do? What are we trying to achieve? What is the actual outcome? So this is what it looks like right now. We can add more to it. In fact, I think I'll turn off chat. That way it's easier to see. I got lots of caffeine pumped, ready to go. I got, this is actually not an Alani. Yeah, hashtag outlier backtest. Like this is going to be, this is Chris' favorite part trading. This is the one we found at Costco. Pro Baller. Pro Baller. Pro Baller. So we got like a 24 pack of Pro Ballers. I got it in my Bucky's koozie over here. I got a full cup of HEB Texas Pecan over here. So we're about to get busy. I'm excited about this. Okay. Okay. Let's kick this off. First, need to review the open trades and paper trades for any exits. And then I want to do a short list of new trades for today to go on the back test. I'm sorry, not in the back test, but in the paper testing. Then once I have this list done, this is going to take us a little bit. That's when we'll start focusing in on the back testing objectives. Feel free in the comments to give ideas. I'm very open to testing ideas and feedback. I love smart people. I would consider everybody watching this right now to be one of those smart people. And if you have an idea, just share it with me. Let me know. In fact, let me go. We need to make a Discord announcement. I forgot to announce this on Discord. Let's go do that real quick with a link. I've already sent everything I need off to the editing team, so they shouldn't need anything from us. I don't know what the link is to this video, though. Usually I have a share button. Okay, view on YouTube. This is going to get real meta real quick. Sending this link. I'll put it over here. Okay, I got what I needed. We're going to close that now. I am live back testing. I'll be here for a while testing new ideas out. Come and hang and share your ideas. Let's work on making hashtag MOTU $. Okay. So first on the list is I want to review the open trades and paper exits. See if we need to take any. I have just the one trade on right now, which is my plan ETF. Now, between you and me, I was actually more excited to go with the Qs versus to go, and you'll see these lines in a little bit, versus going with the SPY. Because the SPY pushing all-time highs, which is bullish AF. I think more people are going to be interested in watching the NASDAQ get to new all-time highs first. Be more excited to watch this one also get to there. So that was one of the reasons I chose that versus SPY. Plus, Plan ETF is really based on TQ more than SPY, but you could use SPY for sure. I just thought of something I want to add on here. Okay. Before we do that, math out scenarios, let's do place the real trades, the new sized trades in the what did I call that? UTPS theory. You'll see what that is in a little bit. Senior Wahoo. Friday and backtesting. Truly great to be an outlier. Oh yeah, good point. Spy was out of the value zone. I forgot about the value zone. Let's go jump over that real quick. You're 100% right. That was actually one of my things. Yeah, it was so like way up there. And it was in the value zone for a minute. Dude, Mark, you totally nailed it. Yeah. And then that's exactly part of it. Yeah, cool. Thank you for reminding me of that. We'll definitely be using the value zone a little bit. But first, I need to focus in on reviewing the open trades and paper trades. Okay, so open trade is this. Do I have any exits today? Not a sell signal. No, no. And it's got a long way to go before that point. So yeah, no exit signals on the horizon for this. Now, there's a lot of paper trades. On purpose, I did that. A lot of paper trades. So I have them all in a list over here. One of them I put on yesterday accidentally. I didn't even see earnings were there. It's already been closed out. It's not going to be part of our data set. And that was Cloudflare. But looking at this list now, which ones are down? Oh, let me rephrase that. Let's review starting at the top. Then you'll see why I say which ones are down. SPY is not under the 20 EMA. We don't have to worry about it. Earnings. As far as I know, none of them have earnings. And let's go check for any outlier blocks on these guys. So we'll do a quick round through these. We're literally going to blow through this, and I'm going to look up here for earnings and if they're hitting an order block. So okay, no order blocks, no earnings. Next, trailing stops. So this is what I mean by if anything's going down. If it's going down, it's going to be a lot easier to see if it's going to hit its half ATR or 2 ATR emergency exit, or if there's any of this going on. So let's go take a look. So JCI is down, but not to an exit that I have to worry about. If it is an exit point, I'll mark it red. We don't have to spend a lot of time on it. Like this one right here. GRC. Wait, I closed GRC yesterday. That one's gone. So don't worry about that one. Net should have already been sold. It was sold. Okay. Close that one. Intap could be close to an exit later. We're not worried about it right now. Just making some notes. Oh, Palantir's up another 8% today. Gap and go, bro. And it's in the best group. Okay, cool. So I don't see anything to worry about right there. Next, we need to look at any sell signals and breadth and if they've hit their targets. So I've already got them all listed in my favorites. So this is going to be quick. Watch, we can go boom, 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 boom. Not Q's, not SPY, CrowdStrike, boom, boom, not the Dow, boom, 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 boom. By the way, I only learned this from an outlier, but if you click the middle scroll on your mouse wheel, that will pop open the link in a new tab. Too easy. Okay. All right, cool. So let's go through each one. ALNT. So let's discuss the heat map targets. I know that that's caused a little bit of confusion, and I don't want it to. It's not as hard as you might be worrying about. But none of them out of cell signal. So we're gonna look at these. We're gonna look at these. We're gonna see if the breadth turns negative on any of these. Okay. If the breadth turns negative in that sector, it's gonna show right here on the stocks dashboard. So that makes life easy. That makes life super easy. All right, heat map targets. Now, remember, when you look at a stock today, you cannot see today's heat map. You're looking at the close of yesterday overnight compute heat map. Okay. So that's 5362. So meaning when I put this on, I'd actually be looking at a day prior at 4986. So the spreadsheet I have, this was ALT, ALNT. The spreadsheet's linked below. You can have it. Just go to the paper trading sim tab. Put 4986. I also put a formula in here to calculate my heat map target. And I just put that on the chart to make life easier as well. So if I go to ALNT, heat map target 63. So display is where I'm going with this. What is our display target today? 5362. Target's not hit. Target's not hit. If it does get hit, we'll put a line at the bottom of the candle wick, whatever it is today. And then if it closes under that point tomorrow, we'll get out. No stress. Okay. So let's look through these. We've already looked at ALNT, ATI 5830, ATI 62. So it's not hit. So we'll just close it. It is PRLB 6671. 73 is a target, so we can close it. APH 5136. Oh, I don't need that tab, sorry. 5136 or APH 63. We're good there. 78. Oh, by the way, some of these were really high, which I was actually excited about. Like, look at this, look at this, look at this. Some of these, we'll get to them at some point. That's the wrong one. Some of these are over 95. We got 94, 93, 96, so 92. So this will be fun to add to the back test as well. I'm excited about that. Okay, back to this. KN 78. Target for KN 80. NTAP 66. Target for NTAP is 75. That one looks like it could close later on. We have to see. Palantir. Target is, or 63 is today. Target on Palantir is 65. So we're not there yet. Oh, somebody asked about order block on there. It's way up there. It's at 190. I'm not even stressed about it. Let's go to Rely. Today is at 77. Target's 84. Not there. Crowd 75. Target is 83, so it's not there. ZS is at 57. Target is 62, so it's not there. EGY 67. EGY target is 76, so it's not there. See, it's not hard. It's just looking at one versus the other. 60 today on JCI. Where's JCI? Oh, it's up here. 62. What I got right there. In fact, let's alphabetize this list. Okay. What was it again? 6048. 62 is our target, so not hit yet. Ibex. 6620. 74, so it's not hit. 70 on CTS. 75 is our target. Told y'all this would be boring. 92 on IoT. 98 is our target. 86 on Garmin. 85 is our target. Okay. So we're going to need to make a note on that one for later. So this one is at or above the target. It's at 86 today. Yesterday it was at 83. Hang on. What did I put on here? Oh, okay. I put it on the 5th. So it was 80.18 when I originally put it on. So the target is 85. 5 points higher. 5 points higher. Editing team is texting me. I'll get to there in a minute. Okay. So Garmin for sure we'll have to look at today. So the way we would do it, it's not overcomplicated. The bottom of the way, wherever that happens to be today, we'll throw a line on it. And we'll say heat map target line or something like that. If it closes under that point, that will be a hard exit. We're just basically moving up our stop to there. If it doesn't close under it and it runs, and we just let it run. Okay, let's keep going. Oh, actually, let me check on the team. Feel like the background could have a little more something. Right now, it feels too plain. Oh, yeah. Oh, yeah? Okay. I have my first child interruption of the day. Do you want to say hi, Elliot? Can I come over here and say hi? Okay. This is Elliot. Elliot, bend down a little bit. Say hi.
Hi.
Okay. All right. I just approved it. Okay. Not bad. That was easy. Let's keep going. Okay. So Garmin, we're going to take a look at later on. We've got 69 on CSW. Go CSW here. 68. Okay, another one that got hit its target. See, it's not hard. We'll just put a line at the bottom of that, just like we're going to do on Garmin. Easy peasy. But we don't know where that line is going to be right now. We just don't know. Let's go to the next one. GTLB 93.41. Ooh, wow, that one popped up high, didn't it? 99 is our target. 99 is our target. Jeez Louise. Yeah, this one's super high. And then again, like it just popped up 8% today. 8% today. So don't be scared of when it is high. You just got to know where your exits are going to be. So yeah, we got to make sure we GTLB. Oh, there's nothing to. Oh, wait. Gap. Let's also make a note on this one because this one's going to be like a gap. Make this one blue. In fact, I want to make all these other ones green. Okay. So then it stands out better. Need to look at them. All right. GTLB. Go look at that one for its gap. GTLB is blue. Okay. Toast. 93.48. 97 is our target. Wicks 64. Wicks 73 is our target. Hay 97. 100 is our target. Yeah, that was at 96.81 yesterday. 96.81. Pretty crazy. So that one's fine. Let's keep going. CMC 65. CMC 72 target. And ALNT 53. ALNT 63. Okay, so we've gone through and we have validated all of the exits. Now this was on 25 trades. That's a lot to manage. Okay. There are 3. We've got CSW that hit its target. We've got Garmin that hit its target. And then we've got what is GTLB? GitLab. Okay, we've got GitLab that gapped bigly. So we're gonna make sure we put a gap line at the bottom of this. Okay. So more caffeine is more better. More caffeine is always more better. So we're done with step 1. We're done with this. So I want strike through. Where's my strike through? Make a short list of new trades. Okay. Let's make a short list for today. Go to first, work our way down. First, work our way down. Spies and bullish trend, spies buy signal, spy fear and greed heat map. It's getting close to 70. I saw that. Go to market breadth. Market breadth. Summary. Spies heat map value is at 67.58. So we're still good there. And rising. And rising. It's green when it's rising, it's red when it's declining. Full stocks breadth. Full stocks breadth is bullish. Okay. So we're good here. Now we'll go to the sector. First, do we have outlier channel on the market? On the full stocks, I should say. So we have 1. We have a score of 1 here. So we need to make sure that whatever sector we look at also has a score of 1. Pull up the sector intelligence map. We'll look at that in a second. So the score, the outlier channel score, is there more uptrends and less downtrends? That's a score of 2. If there's more uptrends or just less downtrends, that's a score of 1. And that applies into the sectors as well. We got to make sure we got that. Sector breadth, we'll check those in a minute. Sector relative greed. This is the area that is what I'm working on right now, because none of them have higher, not a single one has higher relative greed than the market. So what does that consist of? Sector relative greed is the measure of the constituent heat map for that sector versus the SPY's fear and greed. So what does that mean? The SPY asset, what is its fear and greed score? The constituent heat map, what is the average fear and greed score of everybody in that sector? So if we go to ALNT, this is in the tech sector. In the tech sector, the constituent heat map, the average score is 56.33. Now, it's taking this chart over here, and then it plots it over time. Shows you how many are greedy, how many are fearful, and the higher they are, the higher the score, okay? So the average score right now is 56.33. Yesterday, the average score was 55.25. So where's tech? Right here, 56.33 and moving up. We see that. Now, what is that value compared to the SPY? It's lower. There's not a single sector, not one sector, that has a higher fear and greed score than the SPY, which means Plan M's locked out. But there's obviously lots of trades, lots and lots of trades that you could make. And so because we had the new sector intelligence map now, let's see if it makes sense to remove that variable, because that's all we're doing here. We're removing one variable. If we take off the sector intelligence map, I'm sorry, sector relative greed, and substitute with sector relative greed. No, I said it backwards. Take off sector relative greed and substitute with the sector intelligence map. Does this give us more opportunities to trade? And I'm going to say, yeah, for sure. But I need the data. Sector list view. Now, this actually could have some further optimizations that we haven't explored yet. But what I'm doing first is the average outlier buy to sell signal is 17 days on average across all the stocks. Now, if we look at this, I'm going to sort by week. I don't care what it did yesterday. One day does not make a trend. But looking at performance for the week and performance for the month, if this is rising on the month and on the week, then I'm interested. Now, these individual dots represent the change month over month. So I don't know what these numbers were in the past, okay? But the material sector in the last month on the rolling month basis, so the 7th, from July 7th to today, it's up 6.63%. From June 7th to July 7th, it was less than that. Maybe it was 3%. From May 7th to June 7th, it was a little higher. Maybe it was 5%. And then from April 7th to May 7th, it was a little higher than that. Maybe it was 5.5%. So that's what these dots represent, is what is the period over period change. Now, what I'm looking for here is not necessarily that it is increasing, although it is increasing. That I like that. I like that the lines are going up, like on a week over week, but it's still positive for the week and it's positive for the month. That's what I'm after. So I'm isolating down into the top three sectors, which is going to be materials, IT, and industrials, because they have a positive week and a positive month, and they have rising buy counts. Now, the buy count is actually over a month. This is what this looks like over a month, where these are period over period by 4. So I'm going to take a screenshot of this. I'm going to throw it in the Discord in the Plan Sim area. Okay. Michael Plummer, my friend. I get it, but I'm also going to give you the data, so I'm going to let you work on it. I don't know if you're here, my friend. I'm going to put this over here. It's like the 5th time he's asked me that. Okay. So that way I can keep up with these. And then we're going to take pictures inside of each of these sectors too. So let's go into the materials sector. We'll start there. Again, sort by week. And so what we're looking for are the best sectors here. Silver is not. Silver may have a great week. Oh, yes. Okay, cool. Silver may have had a great week. Silver may have had a great month, but it's got no buy signals. It's got no buy signals. Michael, I will have that data to you at some point today. Don't stress. So looking at this, I don't want that. I don't want that. Hang on. I do want to include average volume or relative volume. I am curious if this is going to be something that we can play out later, but I'm not testing that for now. So I'm not interested in silver, but I might be interested in this. The only issue is it's already at 100% buy signals. If those buy signals are within the last 5 days, they're still good. So we have to check that. So I'll give, same thing here on copper. Whoa. Okay. Gold, coking coal. We'll take at these 4. Take a look at these 4. The reason I'm going 4, really, let's go 5, because we may have nothing on those 2. Let's go industrial, metals, and mining. And then over here. There we go. Hey, Michael says, thanks, need to find the training video that would teach me how to backtest. You are in that video, my friend. You are in it. You're going to see me go through A, B to Z. It's going to be great. And I'm going to be all jacked up on caffeine. It's going to be amazing. I have so much caffeine to drink. This is my favorite thing in the world. Like whatever your favorite thing is, whomever you're watching, put it in the chat. I'm actually curious. There's nearly 200 of you smart people watching right now. Genuinely curious. What is your favorite thing? This is my favorite thing. Like of everything else in the world. the making watches, like this watch I made right here, is one of the watches I made through. I made myself 2 watches. My wife bought me a third for my 40th birthday. That gets me off. I love making and wearing watches, right? This one right here. Um, this pink color, I really wanted a pink watch, so I was excited to make this one. Watches and stocks. That's me. Eric says Guinness. Senor Wahoo says coffee and brisket. Really? No wonder you keep asking about the briskets. That makes a lot of sense. That makes a lot of sense. Uh, Coaching, chocolate. Watching Chris James is not your favorite. No, it's not. Craft beer. There you go. There you go. See? Yeah, that's a cool avatar too. What is that? I don't recognize that. I like it though. It's pretty. I like how it's a day, date, and a chronograph and a diver watch. That's cool. That's like everything all in one. I like that. River Time. That's a good one. That's a good one. Um, Bourbon. Yeah, there you go. There you go. Paul. I met Paul. At my age, I check each morning if I'm alive and it's going to be a good day. Yeah, for sure. Mark says travel. Art Chastain says learning to trade. Yeah, this can like totally get your rocks off, right? Everybody's got something they love. For me, this is one of the 2 things that I'm just so passionate about. Okay. Beer and fishing. I love it. All right, let's continue on. Okay, so let's save this. We're here. We're gonna drop this in motorcycles. Yeah, you know, I actually used to ride motorcycles. My dad had an electric glide, and they bought me an 883 Sportster when I was in high school, a senior in high school, and now I have a son in high school, and I'm like, what were you? You gave a high schooler a motorcycle? They must have thought, maybe they were like, man, we're tired of this kid. Let's get him out of our lives. There's no way I would ever give my son a motorcycle. But I had that Sportster from the time I was 17 until I was 26. And Colin was born when I was 26. And my wife and I, we made a deal that, and granted, we didn't have money then. We made a deal. I was like, all right, here, I will sell my motorcycle, but for the rest of my life, I get to pick whatever car I want when I want it. And she's like, as long as you're around, sure. As long as you're around, by all means, yeah. So that's kind of been our thing. That's kind of been our thing. But I'm not really a car guy, so that's what it is. What's up? What? What? Oh, I don't want to eat with y'all. Y'all go ahead. Go nuts. Hey, there's 3 boxes. Okay. Something first before Coke. How's that sound? Okay. All right, sorry. More children. I have 3 boxes of Dominoes for them. Yeah, they wanted to get rid of me. All right, cool. You guys love the motorcycles as well. That's awesome. Okay. So let's get back to this. So let's take a look at the material sector, and we're going to look at these five industries. So but I want to do one at a time on these 100s. The others we'll lump together, but let's look at precious metals and copper first. Oh, hang on. Editing team's texting me. Oh, actually, I like that. Oh, yeah. They want to see what I'm talking about. So it was this. So it was that for the thumbnail. Or I said that background was too plain. Then Simon came through with this one, which, oh yeah, that's much better. That's significantly better. Cool. So Simon's going to work on that. Hang on. We'll get back to backtesting in a moment here. Chris got to do his other job too. Joe texted me. Okay. Joe's got family in town. No stress. All right. Thumbs are approved. We're done for that. Okay. Back to this. Other precious metals and mining. So this has 100% buy signals, but if they're within the last 5 days, like literally just go a week back, they're still valid. So I'm curious to see what pulls through. Check 8 of 9. Apply. Oh, outlier signature and positive only. Bye. Yeah, nobody's there. That's fine. That's what I wanted to find out. Next, copper. Turn off the 1. Turn on the copper. Anytime you see this pop up over here, somebody texted me. That was Joe. Oh man, Joe's got a lot of stuff. Dude, that sucks. Try to enjoy it. Okay. I know. I know. Something before you have a Coke? Yeah. Okay, so did we try copper? We got a copper. FCX. FCX. We've looked at FCX multiple times recently. Multiple times. Let's see if that outlier block is still there. Man, I can't wait for the outlier desktop platform. We're meeting Monday. So yeah, that's an outlier block, so we don't want it. We're meeting Monday with Deep Thought, Mahesh, Joe, and I to see the latest update on the desktop platform that's going to be using TradingView. And there's a high likelihood that it'll have up to the minute charts as well. That'll be nuts, 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 nuts. Live data. It's gonna be crazy. Okay, FCX is off my watch list. So that was copper and other precious metals. Boys are heading upstairs. Cause trouble. Dude, my kids have it so good. They have a room, a playroom with like a basketball goal, Xbox, TV, right? All the stuff up there, all their games, sofas, Legos. And then right beside that, they have their movie room, which has a 200-inch movie screen. What? They have a Minecraft Lego world up there. They got a 200-inch movie screen to play video games on. Like, they're so spoiled. Oh my gosh. Okay, so these two are off the radar. And that was one thing I wanted to see was if it's hitting 100%, is it too late to get into that? It could be. So let's go to gold now. Let's focus in on gold. Got lots of gold. Lots of gold over here. Okay. And that was at 87. So some of these I think I already picked up. I don't remember. Oh, no, no, no. I don't have any material stocks yet. I just have industrials. Okay. So let's do this. Let's go split screen. And then over on the right-hand side, I'm going to add in these real quick. They've already filtered my criteria, so I don't need to go look at the outlier dashboard. What I'm going to do is I'm going to go AGC, AEM, GFI, NEM, or some of these are part of season 1 this year. WPM, I recognize OR, NEM, Ego, FD. I think I got them all. these guys. We're gonna unflag them. No, 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 not everybody. Whew, that was close. We'll throw light T on them or whatever. Okay. Take a look at those guys in a moment. That was the gold industry. Coking coal will be our last one. All right, nobody's there. Cool. So we got a handful of names. Oh yeah, it's the other window now. We got a handful of names we're going to take a look at that were from the materials sector. Now let's go back. To the tech sector. Joe texted me. Hold on. Yo. Joe's making money today on his Plan M using the SIM, the SIM dash, what we're talking about here. Yeah, boy. Chris Chains approves. That's what I'm talking about. Yeah, I had a feeling. I had a really good fit. Dude, as soon as I saw this on Fin, like the moment I saw this on, sometimes I have like premonitions and feelings. And like, I know when something's going to click. And when I saw this on Trading FinViz, I was like, oh, this is a big deal. Like a really big deal. We need this now. And to combine that with our buy signals and being able to sort and filter and slice and dice to find like the leading industries and the leading sectors, this is like literally game changing for us. Literally game changing for us. Okay, let's keep going. We're going to look at communications. And since the top three are not, since the top three are not at 100%, we'll just do them all in one go. Okay. Communications, electronics, IT. Services. So just take this off. Over here. And then we have new industries. Communications, electronics, IT services. Okay. Apply. Got a lot of names there. Let's do it. FEIM, CSCO, SNX, EGII, AVT, EDC, HPE, HCKT. IBEX we've already got. I mean, I've talked about INFI 100 times lately. ACN, CTSH, EXLS, FISV. GIB, IT, and LDOS. Okay. And so that's the tech sector. Now let's do the final sector. Industrials. All right, so we're gonna skip electrical parts because no, I'm not. No, I'm not. Thought that was the month. Top 3. Now, could you go more? Absolutely, you could go more. I'm focusing on just the top 3. Okay, so let's modify this to be industrials. Industries were electrical equipments, building products, aerospace. 2 aerospace. That could be a glitch. Electrical equipments and parts. Building products and equipment. And then aerospace and defense. Yeah, there's 2 of those. Wait. That is definitely a glitch. Okay, hang on. I gotta text that to Mahesh. Okay. And apply. Ooh, sim mining. Yeah. Brad, where you been, dude? It's been ages. Brad is one of our alpha graduates. In fact, Bravo class would have been called Beta class had it not been for Brad calling them Bravo. And I was like, wow, Bravo does have a much better ring to it than Beta class. So thank you for that, Brad. Okay. We got a lot of names in here. There's Embridger. Okay. Let's do this list now. Grandpa just texted me. Good. Yeah, they're good. Okay. POG. ISSC. MRCY. NVT. ATRO. Katos. We traded that one not long ago. LPX. T-Rex. B C A V A V D C O PKE PA EMBJ NPX Air HII WI HWM. Okay. Even more stocks to look at. Okay. So now that we have this enormous list, now that we have this tremendous list of the top 3 industries and the top 3 sectors, under no circumstance would I ever recommend you to put on these amount of trades. Embridger. Uh, there's a lot to look through. What I'm gonna do is very, very quickly. Okay, this is a great example. What I'm gonna do very, very quickly is I'm gonna look for I'm gonna look to see if the stock is tradable. Okay. I already know that it fits into everything on here. It's already got a bullish trend, it's already got a buy signal, the heat map's already rising. We're double checking order blocks, we're double checking price over the 10 EMA. This is already, we already know that. That was in the filter as well. So at the end of the day, I'm just looking for order blocks and making sure price hasn't collapsed this morning. But this is a big but. Can anybody tell me There's nearly 200 people watching this boring ass live stream with this random guy on the internet. Can anybody tell me why I would not want to trade KGC? I would actually really, really, really want to know what you guys feel is why would this be something I would exclude? And for context, DB, Deutsche Bank, is similar in this way. So if you want to look up Deutsche Bank real quick and then come back, there are no wrong answers, but this is a stock I wouldn't trade even with your money. I'm not scared of gaps. What are y'all talking about? Ah, Mark Bayard. He's got it. Through mini gaps. I'm not scared of gaps. What I don't want to see is gaps all over the place. Look at all the gaps over here. Look at all the gaps right here. Look at all the gaps right here. Deutsche Bank is a perfect example of this. Joe and I had this conversation literally yesterday. I do not trade Deutsche Bank anymore because it's such a gappy MFer. Look at this, dude. Like gaps all over the place, up and down all the time. That's a very, very difficult stock to make money on because it can gap down one day and then gap right back up the next. So for me, when I see a stock that's a very gappy stock, and this, I don't have a rule around this. Normally, this is just Chris in the background, filtering out things. When I see it gapping all over the place like this, I don't want it. No way. Not even going to touch it. So that's a disqualification. I'm not afraid of a gap. I wouldn't say I'm afraid of when that gap's all over the place. I just understand that there's inherently more risk because of this. Yeah, there's your pro tip of the day. Very, very gappy stocks like that I don't want. AEM is a bit gappy as well. Not as much. It's been on a tremendous run right here lately. Not as much. It's a lot smoother. A lot smoother. So this one doesn't scare me away. This one doesn't scare me away. So don't be scared of gaps. Like there's no reason. In fact, gaps could be the start of the next big run. I mean, look at this. Right? Don't be scared of gaps. Because the person who saw this gap here, 6% gap, they're like, oh my gosh, that's terrifying. And then it went up after that. And now it's got another gap today. How much is this gap? Another 5-6% gap here. These gaps are great as long as they keep going. As long as they keep going. Yeah, AEM blinks. Yeah, I just rolled AEM. Yeah, gappy and crappy is no bueno. How would I define too gappy? So I don't have a hard rule around that. It's more of like I look on the chart, and if there's too much, there you go. If I look on the chart and I see too much white space between candles, that's too gappy. This one, it's fine. This one's fine. KGC, no está bien. There's so much white space all over the chart in between them. Okay. So AEM. So what I mean, this is going to be like ultra fast. I don't see any reason not to get into it. So in the afternoon, I'll look to put on a 1 share trade in the paper account specifically to keep track, just for record keeping sake. And this is not something I'd ever recommend because I've already got like 25 positions now. I might be adding another 25. This is a ton of work, but I need the data and I need it now. So AEM looks good. GFI, another really, really like crazy gap up move coming up. 18 days to earnings. That's a little bit gappy for my taste. I'll skip that guy. Okay, cool. This one, dude, these gold stocks are rocketing higher. This is what you want to see. Yeah, I'm not scared of that. Okay, this is the wrong ore. Hang on. That's the right ore. What the I hate trading view sometimes when it does that. I don't want to compare, so I want to add the one that I'm on. Core looks good. Okay, back over to here. This has earnings too soon, so we'll drop that one. Look, dudes, like legit, this is the type of moves you're looking for. When you've got a whole industry that's rocketing higher, there is something happening. There is something happening. And look, it's not a gappy stock at all. It's not a gappy stock whatsoever. I don't see hardly any gaps at all. But you see them here, something's going on. Something's going on. How close is this order block? 3%? That's okay. It's my notes from earlier this year. That looks fine. This is too close to earnings for me. Order block. Now, I have a funny story about Cisco. I have a really funny story about Cisco that I'll tell you in just a second. Simon texted me. Oh, yeah, please do. Okay. Funny story about Cisco. So when Mahesh and I started working together, I think it was in 2019, maybe 2018. They had a different product called FinClub. FinClub.ai, I think was the website. And if you go to my oldie podcasts, you'll actually see me promoting FinClub.ai. That's how Mahesh and I got started. He sponsored my podcast. FinClub.ai is a very, very, very watered down version of Outlier. Very watered down. And the first trade I ever took using that was Cisco. And I'll never forget, I was at the lake house. And I put on the trade, took a shower, came out of the shower. I was already up $150 on like a time. I think I had like a one lot on. I was like, oh, this stuff works. This is great. I'm gonna take everybody out to lunch. So then we all went out to lunch that day. That was a fun experience. That was a fun experience. So that's my Cisco story. Back to this. Earnings are a little close. I mean, we could play this up into earnings. When are they exactly? Oh yeah, next Wednesday. I can live with that. Oh man, look at the difference in the. This is interesting. Y'all look at this. Look at the difference in the attitude of the gold stocks that are like screaming higher. Okay. To the tech stocks. Very different attitude. Very different attitude. So like this one may not come through because it looks like it's close to its 10 EMA. So I'm just gonna drop it off for now. Not gonna stress on that. Okay, that looks fine. Oh, gap and go. Look at that. Gap, another gap, go. Let's go. I heard somebody say the other day HPE looks like a VCP pattern. Man, I don't see patterns. I can see it coming down and come back up, but it's, I don't know. Okay, this one's an order block. Infi. Oh, there's a different Infi, isn't it? Yeah, that's right. Stupid Infi. Okay. Order block. Order block. Order block. Under the 10. See, this is why I check, right? That's why I checked. Got rejected. It's a bullish order block, right? By a bearish order block. We don't need that. How many days till earnings? Thursday. That's fine. Okay, who takes it now? Simon. Okay, hang on. Oh, I love it. Okay, keep going. Nope. Look at those wicks, both directions. Yeah, that's got earnings real soon, so I can drop that off. Thursday. Much room to this order block. 4%. I'm okay with that. Oh yeah, it's already rejected off that order block. Nope. Nope. Again, already rejected off the order block. Oh wait, temperature earnings tomorrow, Monday. Order block. Order block. Order block. Order block. All right, final one. We already looked at this one. We're good. Okay, finally, we are done with looking for new opportunities for today. That's a buttload. Okay, again, I don't recommend anybody take on this. This is purely for number one, it's not real money, so I'm not having to like worry about winning or losing money. Number two, it's just data collection. Just data collection. Okay. Oh, you know what? Tech sector outlier channel score is 0. Ah, thank you. Thank you for that. That actually, I would have broke that. I missed that. I missed that. Okay, let's go back. I want to confirm that as well. Tech sector, you're right. Order blocks are, or not order, outlier channels are 0. You are totally right. Materials and industrials were good though. I totally missed that. So all these tech stocks that we just spent too long going through have to go away. I'm sorry. I just wasted everybody's time. But at least we got to look at them together. That was fun, right? It was about the friends we made along the way. Okay. Pretty sure these are all tick stocks from Cisco down. No. There's some industrials here. The problem is I have no idea what sectors these are in. Oh, okay. This should help. OC, that's your outlier channels. So what this is doing is it shows you how many uptrends are going, or if there's an increase in uptrends or a decrease in downtrends. A score of 2 means you got both. More uptrends, less downtrends. That's a great sign. Score of 0 is either, well, not either, but less uptrends, more downtrends. So until it breaks to a higher high right here, then it won't light up. But OC does equal outlier channel. Yeah. Some people used to call these donkey channels, and we can still call them donkey channels. For sure. Okay. But let's go back. I'm trying to find the easiest way to lock these guys off. Okay. This is not. This is the industrials. So annoying. I should have found this sooner. Electrical equipments and parts. Building. No. It's industrials. Information technology. Communications, electronic components, IT services. Electric components. The last one was communications equipment. Okay, now when I see these names over here, I'll just delete them. Cisco. Okay, I think Mercy was our last one here. Double check MRCY. No, that is in the industrials. Okay, what about ISSC? That could be really useful. Rabbit hole. Eldos is defense. Everything else above is not. Cool. I'll take your word for it. There. Remove. Excellent. So now we should just have gold and industrials. Not gold, but materials and industrials. Okay, good. Let's go back to the agenda. So we've done this. Okay. Okay. Now, we've already done that. Now we're going to shift gears onto playing ETF. We're going to shift gears onto playing ETF. So let's discuss the revelations. Let's discuss the revelations. They were tremendous. Okay. So this file I will make available to you later on, not at the moment. Actually, Scott owns this file, so I have to duplicate it and make it available. But this is Plan ETF. This is exactly Plan ETF that you're looking at right here. So I pulled this out, and yesterday I manually backtested. And I had a theory that I wanted to test. My theory was, can we find a greater edge? Now, so when you're backtesting, in fact, let's write this down. I think I'm going to save this for Charlie class. So how to backtest. How to backtest. Number one, have a theory. Have a theory, right? Have a theory. And it's the scientific method. The scientific method of like, have a theory, have one variable, test it, see what the outcome is. If it's better or worse, mark your observations, change another variable, see if it makes it better or worse, right? That's what you're doing. That's all you're doing. So number one is have a theory. My theory was that we could come up with a better expectancy on Plan ETF. Better expectancy on Plan ETF. So I went through yesterday and I went to every occurrence that Plan ETF was lit up. Now I should do these in a different color. Hang on. Green's my favorite color. do this. Like it actually is my favorite color. You want to know something weird about me? This is sharing too much information. Chris's favorite color is green. Like I love green. Um, we have sheets on our bed, and well, everybody has sheets on your bed, but we have a housekeeper that comes and changes the sheets for us. And it's kind of like roulette on what color sheets we get because we've got, you know, white sheets, khaki sheets. Uh, we have like gray with the pattern sheets on the bed right now. Anyway, they were here yesterday and they changed the sheets on the bed. And it's like a roulette if I get my green sheets because they're my favorite. I think we have 2 different sets of green sheets. And I always look to see, okay, what sheets you put on. And it was not the green sheets. And I was like, oh man. And my wife, she knows that I'm weird because I really love the green sheets. And this is so weird, I know. Because I get to roll around. I tell her I get to I get to wallow around in my favorite color. I know that's weird, but that's literally what I love about green sheets. It's my favorite color. I get to waddle around in it. It's weird. I know. Let's go back to this. Okay. So theory was we can improve expectancy. And so I was like, okay, well, I have all this data. Maybe we could use it. So Plan ETF is built around the QQQ and SPY entry and exit signals, but using TQQQ and SPXL as the trading vehicle. It's exactly equivalent to saying, I want to trade Boeing, but I don't want to buy the stock. I want to buy the option. So that's where TQ comes in versus just buying Qs alone, is getting a different vehicle that has leverage. So looking at this, if we go to close some tabs, if we go to this, I went to each one of these occurrences. So let's do that together so you can see what I'm talking about. Went to each one of these occurrences. So got to go all time. And then slam this all the way over. This does have a lot of data that loads in, so yeah, I gotta give it a second. There we go. Okay. So I've slammed it all the way over. Maybe widen it out a little bit. There we go. Okay. So now I'm looking from January of 2000 or 2020 to March of 2020. So this is basically a quarter. And then going through and looking at the entry date and the exit date. And then going to the chart of the Qs. Go to that spot as well. And marking on here, turning on the value zone. Okay. And then looking on the April 13th. Right, so we're validating April 13th. April 13th. Going over here. And then I added these headers and I added these conclusions yesterday. So this is the return. All right, so the return for this particular trade was 55% over 105 days. Could you imagine your account growing 55% over 105 days? That'd be great, right? And you don't have to do anything. You just put it on and leave it alone for 55 days. Cool, right? And there's several instances where it's had crazy runs, 49% in 95 days. We'll get to that one later. 89% in 97 days. And it obviously doesn't win every time. But starting there and looking at the outlier heat map, what was the heat map doing? Now remember, when you look at this date here, where's it at? April 13th. So I got to scoot this over a little bit. Here. When you look at this date here, if you were to look at the display on that date, on April 13th, it's going to show the close prices of the prior day. So you always have to look one day back. So the fear and greed was 65.64, and it was rising. Right, we can see it was rising on the fear and greed. And then the constituent heat map value was 51.61 here, 51.61. And it was also rising. Where is that? Here, rising 51.61. Now, I did calculate relative greed because I was curious if this made a difference. If the and so these are just notes for myself, right? As from going through, like, okay, what are some things that I could observe? What's the heat map doing? What's the heat map value? What's the constituent doing? What's the constituent value? What's the relative greed between the two? What was the outlier channel score? What was the breadth on the cues? Because that's shown down here too. Was it in the value zone, which we could look at on the trading view chart, which it was. And then did we need a stop? Did we need to change the stops in any way? So that's what I looked at. These were what I was looking at yesterday when I found this big revelation. Hang on. He was texting me. Cool. So going through these, right, just manually, one at a time, from April to October to November, and I got all these in here. They're all marked. All right, there's your October, there's your November, there's April next year, there's May the next year, there's July the next year. Okay. So there were a couple things that stood out. One of them was that this one, which row is that? Row 4. Where is it? Here we go. Row 4 had a 27% increase here from November to February. Let's go to that. So that's this right here from November all the way to February. Okay. I don't have the exit signals marked. That's a crazy trade. Crazy trade. But you'll notice right off the bat, within 2 days, a pretty hard sell off. A pretty dang hard sell off. This was down 4%. And on the TQs, that's 12%. That's a huge sell off. Oh my gosh, that's a huge sell off. But it ended up being a really, really, really good trade. A 27% gain overall. So that's where I'm at right now, is over here. Where does a stop make sense? Right? Because in this case, the 10 and 20 didn't cross. And let's review what the stops are right now on Plan ETF. Sell signal, 10-20 cross, order blocks hit, or breaking out the top of the value zone. I mean, realistically speaking, if you had followed a stop that wasn't listed on there, you would have given up. First, you would have locked in a huge loss and then not been a part of that huge move up. So really would have sucked here. So let's have a theory and let's test this theory. We're going to test it together. How's that sound? Our first theory we want to test is, where does the stop make sense? Maybe the 50-day. 50-day? Right? Because it didn't come close to the 50-day. 50-day continued on its way up. Hold tight. Okay. So a 50-day could make sense here. Let's look at the ATRs. The ATR on that date was 726. So let's write that out. 7.26 ATR. All right. Now, also, one of the reasons that I put is the stop needed, yes or no. Because, like, if it just takes off, then you never even need the stop. So we don't necessarily have to go through those trades and see what we need to do differently, okay? So looking at this one, 50-day could be a good one. So we're going to write that down as part of our theory. Does a 50-day make sense? What other theories, and I'm asking you now, what other theories do you think we should try? What other theories do you think we should try? So this went down $11.5. So it didn't even go down 2 ATRs. Didn't even go down 2 ATRs. 2 ATRs would have been down at, that would have been around 1450. Around the 50-day, actually. Interesting. 1020 cross. Well, that's already been tested. That's already part of our exits here. So we don't have to retry that. Hang on. Team's texting me. Okay, good to go. Let's add 2 ATRs to the list. 2 ATR. Question mark. What else do we think? And another point that I want to mention, we're focusing only on the exits, right? We're just doing one variable right now. That's it. 1.5 ATR. I like that. 1 ATR. 1.5 ATR. Those are valid. Okay. What about breaking out the value zone to the bottom? I think that's a good one too. Yeah, that's what I'm thinking, Art. That would be the same thing as break out of the value zone at the bottom, because the bottom of the value zone is a 20 EMA. Brad says percent of move up or down based on 5 days after you purchase. Percent of move up or down based on purchase. Brad, help me out here. Expand that thought for me. So I'm thinking a close under the 20 EMA. 20 EMA. Which is the same as break out of the value zone on the bottom. The 50-day, different levels of ATRs. Okay, let's go to another one. Another example, 9/17 of 21. Maybe this will inspire us for some new ones here. 9/17/21. Aha. Okay, this one, I was like, what the frick? It's not even in the value zone. I would not have taken that trade, period, full stop. No way. I would not have taken the trade. The outcome of that trade was negative 7.5%. I mean, not only that, but the heat map was falling. The constituent heat map was falling. It had a lot of things not going for it. And I don't know why it was included in the back test, but it is what it is. Let's go on to the next one here. November, December of 2021. Struggled. November, December. Okay. So that was like right at the value zone, like right at the very, very bottom. So I considered that inside. Kind of like the idea of using the breakout of the value zone bottom as the exit signal. And the 50-day right there too. And this one, not much you could have done on that. But also the 10 EMA. But hang on. remember, we have to be robust, right? Because even though it does work three different times here, if we go back here, it did close under the 10 EMA. It did not close under the 20 or the 50. Liking that 20. Because if we apply that same logic here, where did it break out of the 20? Maybe not quite. I mean, we could be for certain on this one. So let's say benefit of the doubt, we would have taken that trade, but not that one. That's a breakout. That's another breakout to the downside. I think that could be something. Okay, let me review comments here. All those close above the 20. Yeah, that's what I'm thinking too. Give it a week to prove itself. Oh, I see what you're saying. Give it 5 days, and if it hasn't run in 5 days, take it off. It's not a bad. A time stop. Is that what that? That's what that would be. Time stop. Time stop of 5-ish days. Time stops are a really good idea. Because if a stock isn't working, you'll know. Oh, you'll know. Just a second. Okay. Actually, tell you what, I do need to take care of something real quick. Be back in a couple minutes. Hang on.
Class is in session. Yeah, we're all outliers too. Grab your coffee, fire up the chart. 10 over 20, that's how we start. No panic trades, no gambler's path. Just like the turtles, we trust the math. Deep in the data, the signal's true. Save time, make money with less risk too. This isn't luck, it's what we do. Following facts, it outlier you. No more FOMO, just process and truth. Follow your plan, stay bulletproof. When the market talks, we listen through. That's what they teach us. Outlier you. Class is in session. Save time, make money. Follow your plan, no FOMO crew. Start winning together. Every stock is bad till it acts just right. Respect losses, stay in the fight. If it's exciting, you're doing it wrong. Touch some grass, reset, stay strong. No perfect system, just perfect reviews. Data beats drama, the charts are the news. From fear to greed, we found what's true. Profits follow price. Outlier, you follow your plan. That's what we do. Sit in cash, don't ever do. No perfect system, process is true. That's
Okay, I'm back. Let's get back to it. Okay, so we're liking the idea of the 50 EMA. I'm liking the idea of the 20 EMA. I'm liking the idea of the time stop. So that's why we have these objectives here. Try and come up with a plan. Okay. Next, let's go to the other ones over here. Okay. November, December 2022. You're welcome. You're welcome. All right. I love that song, by the way. That's like my favorite one of my favorite songs that Rick's ever made. November, December 2022. Where are we at? Here we go. Okay. Okay. Let's talk about these guys. So November 14th to 12/9. All right, outside the value zone. I'm seeing a pattern here. Ooh, are y'all seeing a pattern here? I'm seeing a pattern here. Okay. Could we have got out a little sooner? Yeah. I'm definitely seeing a pattern here. Okay. Now this one, 12/16. 12/14 was the entry. 15/16. Okay, we definitely could have got out sooner, breaking out the bottom of the value zone. I am seeing a pattern. I am seeing a pattern. Okay, let's continue on. This one was outside the value zone already. Let's go take a look at it. I don't know why it was included, but 3/7/23. See, it was outside the value zone right there. A couple days later was a good entry. But yeah, I don't know what's going on with that one. These two. August and October 2023. These two. Okay. So let's review our theory. So right now, we can see with our eyes, everybody can see with your eyes, 50-day could be something, and also breaking out the value zone could be something. We'd have to test with math to come up with these guys. We'll have to also check on the time stop, which is not a bad idea. Not a bad idea at all. Okay. Hey now, hey now, hey now. Chart patterns I can't see. Data patterns, that's where I live. That's where I live. Okay. Data patterns I can see all day, every day. I love data. Chart patterns are tough for me. Let's go over here. We looked at these two. Okay, what was the exit date on the first one? 9/19. Here. Could have got out 3 days earlier. Okay. It's getting pretty conclusive to me that we can improve it. And 11. That was the entry. Exit of 10/20. You see what I see, right? Could have got out 3 days earlier. This candle. Oh, don't worry. Don't worry. Don't you worry. We'll have data around this in a little bit too. We'll have data around this a little bit too. Because these two, we still would have taken with a rising heat map, a rising constituent, outlier score of 2, bullish breadth, value zone, but they didn't work out. They didn't work out. So this would actually fall into the ideal scenario down here. So that means we can actually reduce our losers. Reduce our losers. This is exciting. Okay. Win rate wouldn't change. It would just be the average loss size would change. Let's go to November. And so I think this is a perfect example of this is such a perfect example. These three. Imagine the first two trades you took in playing ETF for these two. You would not be a happy boy whatsoever. You would be so furious. I lost 7%. I lost 16%. This plan doesn't work. Outlier sucks. Chris is full of baloney. The very next one. And this is what people do. They base everything on a tiny, tiny sample of trades, an infinitesimal, inconsequential sample of trades. The very next two went up 27% and 28% respectively. And the one before that went up 49%. But if you happen to start on these two, this doesn't work. I'm going to tell all my friends outlier sucks. This is so important. You've got to understand that whatever happened in the past has no bearing on today. Whatever the outcome of this trade is has no bearing on the future. That's a really tough, really, really tough example for a lot of people to understand. This drives me crazy, by the way. Skinny Buff Guy recommended the Trader Lion book. Um, their sell into strength rules were so all over the place and so contradictory. I was like, how does anybody make solid rules around this? Like it made no sense to me. I was actually very disappointed by that. But also, two closes under uh a moving average. Um yeah, there's going to be times where it turns around after the first candle. But dude, when I heard two closes, I'm like, you're just asking for trouble. Because that second close, the market's already proven to you on the first close is done. Having to wait for the second close, that scares me to death. No way. No way, Jose. Well, that's just my opinion. So going back to this. So this very next one right here, again, the previous had no bearing on what this outcome turned out to be. And it ran and ran and ran. Ooh, but check that out. It blew out the top of the value zone here. Blew out the top. I don't know if this was included in the back test. January 4th. No, that wasn't included in the back test. Go over to January 4th. Here, here. Okay. No, here. Yeah. So this was the exit signal. And it also was the first time it fell out of the value zone. So we need to add to this. Does taking trades off when it blows out the 3 ATR value zone actually make sense? Okay. And then I need to add on this. Blow out top. And then we're just going to do a yes, no on these. What was this one? November 6th, 2023. This one. Blow out top. Yes. And then a little note here. Blew out top. Get kept going. Now, this happened recently. This happened, let me pull up another window. This happened recently multiple times. Blew out the top and just kept going. Mercilessly kept going. And I know some outliers were pretty pissed because they're like, oh, it came out the top and I took it off and then it kept going without me. I get that. I understand the frustration around that. So maybe we need to work on that. Maybe work on that. I kind of like this idea from Leo. When it goes above the 3 ATR, rise to a 10 EMA stop. Let's go down here. Now, what's cool is that we can live backtest this in just a couple minutes, right? It's a theory. We can find examples of when it works, example of it working, and then we can see how it changes expectancy. Oh, I love this. Can you believe we've been going almost 2 hours already? That's pretty nuts. I feel like gluttons for punishment. Oh my gosh, what are y'all thinking? Okay. This one. So both this one and this, the two green highlighted ones. The heat map was falling during that time. In fact, let's go to that. Let's go to May 1st, 2023. There. Okay. Heat map was falling. Now, what we did discover is that if you have it when it's rising, example right here, when it's rising, it's a much better trade. but there were 2 instances where it was falling and still ended up with huge winners. Huge winners. Some of the biggest winners ever. So that I remember specifically having this conversation with Scott, specifically this conversation. And I said, but Scott, a couple of these winners, giant winners, came when the heat map was falling. So we came to the conclusion at that time, doesn't matter if it's rising or falling, as long as it's under 70. Now, taking a look at it, a year later, lots of actual real data points later, seeing, is there actually something to that point? Is it a automatic exclude, or is it a maybe we add it to the watch list? And I think the answer is you add it to the watch list. So if it's still falling, okay, if it's still falling, but it's rising in price, waiting for this to turn around, which it did around display date would have shown May 12th. Turnaround was May 12th. Okay. And then let's go, before we go there, right? How do we make sure we don't get ourselves in a situation where even though it's falling, we don't screw it up, right? We don't screw it up. So let's look at this. Uptrending cues already established. Cues having a buy signal. Cue fear and greed under 70. So would that still be the case on May 12th? Let's go to that. 2023. Here we go. Now where's May 12th? Right there. Ah. Make this color a little different. Yellow, maybe. Yeah, that'll work. I like. Oh, what the hell? Oh, it's behind it in order. Okay. Let's do this line. There we go. Okay, so that really would have been your entry. Now, you might not have had any other trades on. You wouldn't have taken it. Let's say, had you taken it here, you could have got stopped out. But this could have been a logical entry point if this was still in place, this was still in place, this was still in place. So was the fear and greed heat map under 70 on the 12th? Yeah, it was. And it started rising. Now, you don't need everything lined up. That's one of the key things I want to get across. This is 90% of the optimization. This is the other 10%. And if you wait for the other 10% to light up, you're going to have a lot less frequency. Look at it right after that point. And it blew out the top side. So that's really interesting to me. Okay. So that's this one here. And it blew out the top. Yes. Okay. Let's do the same analysis on this one. January 2024. Here. Blew out the top again. Okay. But what date was the turnaround in outlier? This one. See, it was falling in value. Hit its bottom. So this went up by 1 point, then it went down again. Then it really started to go up. That's your turnaround point. Really here. So the display date would have been January 19th. Tell me about January 19th. What did it look like on January 19th? Outside the value zone. Too expensive already. It's at the top of the value zone. Interesting. Okay. All right, let's keep going. Let me get back to the stops. That was our first mission here. March, April 2024. This one. They do need to make the charting software that shows the right side of the chart before it happens. I know that's the Nancy Pelosi plan. The problem is it's $18 million a year. That's there's a problem with that. All right, so get in March 21st, get out on April 8th or April 5th. So a while. Yep. As you expected. Pattern still patterning. Outside the value zone seems to be a better exit. In this case, it wasn't a lot, but it was a better exit. Okay. 412. This entry was not in the value zone at all. I don't know why it was there. We can just move on from that. Next one that needed to stop, August 19th. All right, so this is off to a good start, right? This is off to the races here. August 19th. You've got a rising heat map, rising constituent. You know, everything looks golden, and yet 20% pullback. What the blazes? Okay, so the exit was 9.4. Here, this candle. So yeah, you could have got out a little earlier here. Could have got out a little earlier here. Would have helped a lot, but it would have helped some. Okay, let's keep going. $11,724. So this one blew out at the top of the value zone. Again, I'm not sure why it was included. And then fell right out the bottom on the other side. 1119. Yeah. So another example of using the 20 EMA as a good exit point. I'm not saying it's perfect. By all means, I would not have taken that trade. It's just, it was far outside the value zone. So I'm not sure why it was there. Hang on. I do want to do a couple other things real quick. Take out the trades that were outside zone on trade. Okay. That's going to really help expectancy too. Another one outside the value zone on 1230. Again, I don't know why, but I wouldn't have taken that trade anyway. And then the next two after that, January and February 2025. Okay, boom. That sucks. And then boom again. So this is choppy market conditions. This is a choppy market condition. This sucks, right? What can you do about that? Brad says on a 5-day timed exit would have been decreasing. You got a really good point there, Brad. Let's go back to that. On a 5-day time window. All right, so 1 candle, 2 candle, 3, 4, 5. Then 1.25%. That's not bad. That's not bad at all. Got you out of the way of this. So let's expand upon Brad's theory. Time stop of 5 plus days. Okay, 5-ish days. Now, if not profitable after 5 days, close the trade, or a percent loss after 5 days, close the trade. So if you're not up at all, maybe close the trade. Or if you're down 2% or more, close the trade. Skinny Buff Guy says, maybe not trading when ATR spikes. Let's take a look at that, actually. It's a good theory. Good theory. Let's look at January, February 2025. Here, this time frame. So this shows ATR roughly 8.5, 8 to 8.5. This ATR is closer to 9. And this was a big winning trade. Whereas this was 2 back-to-back losers. I hear your point about volatility, but volatility is actually a good thing if you use it in the right direction. I do like the time stop idea, Brad. I like it a lot. Looks like we're seeing some positive responses in the chat too. I think it's a really good idea. So we'll test this. We'll test this for sure. Let's go through the final ones that need stops. August 2025. And to Brad's point, and to my point too, you don't need a stop if it just goes. If it turns up and goes, you don't even need to stop. Don't even worry about it. $8.28. How frustrating is that? 828.95. Immediately stopped out, but you could have got stopped out sooner. 9.3. 9.3 over here. Practically the same price. Did not ever violate the 50. Could have stopped out here when it closed outside the value zone. Now these are out of order. So this one was my trade. And these two in blue were two that Joe put on. Okay. So now we don't. So that was the end of Scott's test he ran for us last year. These are real money trades. 413.26. That's a big move. Okay. That's a huge move. Yeah, move. It's a huge move right there. Perfectly executed. Exit date. Yeah, bruh. This was when everybody was pissed at Chris. But they're always pissed at Chris. Everybody was upset because the backtest said, hey, if it blows out the top of the value zone, take it off. Okay, so we got to add that. Blow out top. Yes. And it really could have been so much bigger. 616. This is the choppy McChopper face market we all dealt with recently. potential close right here. $23rd, $25th. This is where I actually did close. So a couple days sooner. Didn't really help. And it's around the same price. And then Joe took this July 1st, July 6th. First. Oh, 4th of July. That's right. July 6th, he closed it. Not 100% sure what his closing reason was. It's not closed under on the moving averages yet. I mean, in our reality, this would have been the actual day to close. It was the 7th when those crossed down. But either way, he closed it there. The close outside the value zone. Okay, so we took a look. We came up with some theories, right? We took a look. We came up with some theories. I like these theories. Now that we have these theories, let's start working through these tests. Okay. So first what I want to do is I'm going to make a copy of this workbook here because I don't want to mess up Scott's any more than I already have. Make a copy. So this is going to be plain ETF, and this is what I'll share with you guys. Now let's say backtesting theories. Okay, make a copy. That was weird. I like buried out. Let's try that again. File, make a copy. Then ETF. Backtesting theories. This is taking ages. I don't know what's going on. Yeah, I heard that you like that's actually something Trump is about to start selling. But also the video that I watched, it said that there's nothing illegal about it. But boy, does it smell like insider trading like no one's business. Dude, it's not doing anything. I don't know what's going on over here. This will give that a minute to figure itself out. So we're going to take these out first. First thing we're going to do is this. Next, what I want to do is calculate all the expectancies. Okay, after we've done that, because we just worked on this. Just worked on that. I kind of want to I kind of want to do this first. If price blows out the top, do we move up to a different EMA? Because I like that idea. I like it a lot before we get to stops, because I think the stops are going to take more time since there's more variables here. So this is the next order of what we're going to do. Math out the scenarios is that. Calculate the outcome of scenarios is that. Build a model portfolio. I do want to do that too. Model. Oh. It's done yet? Freaking done. Okay, finally. I just want to have the one sheet. Maybe there was a lot of data there. Ooh, this is mine, so I won't break Scott's original file. Yeah, I think there's a lot of data in these, and that's why it's going slow. Okay, let's take a quick break. I'll stretch my legs. Be back in a minute.
Charts are jumping higher, everyone's on fire. Green bars marching upward, taking me much higher. Said I'd stay in cash, but patience won't survive. Jumped into the party just to feel alive. FOMO fever, hey, I caught it again. Buying every breakout like it's never gonna end. FOMO fever, hey, I'm chasing the lot. Everybody's laughing cause I bought the top. Tips are flying faster, whispers in the crowd. Bro, this stock's a rocket, oh, they're shouting loud. But when the beat goes quiet, the dance floor clears away. I'm left holding candles that just fade to gray. FOMO fever, hey, I caught it again. Trading with the madness, so I should've known back then. FOMO fever, hey, can't make it stop. Everybody's grooving, I just bought the top. Hey. Fear of missing out, it's the trader's curse. Every time I chase, it just gets worse. Wait for the setup, follow the plan, but voices in my head say, buy while you can. FOMO fever, hey, dancing on the screen. Every pop looks golden, but it's just a dream. FOMO fever, hey, the madness won't stop. Everybody's cashing, I just bought the top. Hey. Everybody's dancing. Oh, I bought the top.
Well, that's awkward. That's awkward. Okay, let's get back to it. The classic empty chair. The invisible Chris. You guys are goofballs. All right. Back to this. So let's work down the list here. Check out the trades that are outside the value zone. I don't even know why they were included in our data set. So we're going to remove those. Value zone. Clear. No. Should be, there were 1, 2, 3, 4, 5 instances. 5 instances outside the value zone. Delete. Okay, that took our base expectancy. Holy moly. Holy moly. Holy moly. Hang on. We gotta keep track of these because these are crazy. Okay, this is what you came for. This is what you're here for. The fun part. Okay. The ones that were outside the value zone that we never would have traded anyway gave us an expectancy of 741. Okay. Now let's duplicate this. Duplicate. And we're gonna say Move out of value zone. Okay, let's come over here. And rather than delete the row, let's just delete the cells. Let's just delete this contents of the clear contents is the right way to say it. 9.35. 9% on the expectancy. Holy goodness. Okay. So we went from 741 to 935, just changing that. This is great. This is great. Okay. Calculate all the expectancies. Okay. Now we get to do some work. Now we get to do the maths. This is great. This is fantastic. Okay. So I've done a lot of the math, but it wasn't the most optimal. I was rushed yesterday to try and get this done before we went live. Okay. These are the numbers we're after. These are the variables, rising, falling. We're going to duplicate that over here. Rising, falling. Constituent heat map, regular heat map. Well, that's not what I want to do. This. Then let's move these down. Okay. Rising, falling. But I got to optimize this. Hang on. You'll see where I'm going next. Don't you worry about it. So these are the only two variables here. Okay. So we're only going to account for those two. Outlier channel score. We have 0, 1, or 2. So we're going to do 0. One, 2, greater than 1. Greater or equal to 1. Greater or equal to 1. Next, bullish or bearish on on the Q's breadth. So we're going to do the same thing here. We're going to say bullish. Undo that. So if I do this, it should light up. Yeah, bullish or bearish. Okay. Value zone, they're all going to be yes at this point. Stop needed, we don't necessarily need to do that. Blowout top, we don't necessarily need to do that. So what I'm trying to do is I'm trying to come up with the expectancy answer for each one of these pieces, okay? This is where it gets really fun and mathy. Really fun and mathy if you like mathy. So, Chris, can we do more of these live backtesting? I'm loving it. Well, I'm loving it too. This is Chris doing his job, right? This is literally day job work for Chris. I don't know why anybody would be interested in this. This is boring AF. But you guys are awesome. You guys are smart people. That's probably why. Okay. Back to this. So we're going to go find the expectancy values for each one of these variables. And then we're going to start combining variables. Ooh. We're going to find them individually. Then we're going to start combining them and see where the optimized point is. Okay. But I'm telling you, the vast majority of these gains is had right here. Going with the back test that shows the rising heat map. That's 90, 85% of it. Everything else is tweaks. But if the frequency is less, that causes issues. So in fact, let's add something to that. Let's add frequency. I'm gonna unfreeze rows now because that's kind of driving me crazy. Unfreeze columns. We can keep the rows frozen. There we go. Cool. That's better. Let's add frequency. Ooh, you want to get even more fun? You want to have even more fun with this? Let's add outcome. Now, what is outcome? Outcome is expectancy times frequency. Oh, yeah, boy. Now we're talking. Now we're talking. Gotta move these down. I kind of screwed that one up. That's okay. There we go. Now, I need to be smarter about this because, like I said yesterday, I was just trying to whip together these formulas real quick. I need to make a dynamic formula so I can move these around and we get our results faster. Okay. Fear and greed heat map rising only matters on entry. That's what the data is showing. That's what the data is showing. Is getting into it as it's rising is so unbelievably important. Mm. Gotta get every last drop of that coffee. Now we're on to the energy drink. Don't forget the Brain FM pumping in the background the whole time. We got 2 hours of Brain FM going so far here. This is yeah, I'm digging that. Okay. Okay. Average win. Average if greater than 0. That's right. This is base. This is base case. I don't know if you know the term base case. That is a finance term. Base case. Base case means everything held equal. Okay. Base case. Rising. Average win. So I have down here. But I think I'll screw it up if I just copy and paste over there. Hang on. Here we go. Okay. Rising. This column. Y. Z 44. That's fine. Y2 44. Let's just make it perfect. 40. No, 42. 2. 70. What is Z74? Oh, that's supposed to be this. Z51. There we go. Okay, then we do 42. Perfect. Okay. Now we take this. We don't want to lock down these, do we? Let's just leave them for now. So I can just flip this over. Average win, average loss. Okay. Win rate. Takes your average win. No, it takes your we have to count. So equals count if. Count if. Range, yeah, range. This, comma, criterion. Did I do that right? Let's count ifs. There we go. Criteria range 1. This, comma, greater than 0. Criteria range 2. This. There we go. Comma. Pricing. What's up? Oh, like the Disney pins? That is cool. What? Oh, did you text me that? Okay, text me that. All right. Okay, got it. Okay. All right. All right, counting if this is a win and this is rising. Now I want to make this formula dynamic so I can copy it across and it makes life easier. Okay. I need any more criteria. So this is going to count the number of wins. There were 16. You divide that. Count if. Yeah, just count if this equals rising. 66% win rate. That's pretty dang sweet. Okay. Expectancy. I'm just going to copy this up. Actually, fun story. Expectancy can just be calculated as the average of this occurrence. But to make it easier, let's do equals your average win times your win rate minus your average loss. But we have to do a negative in this case because it's already a negative here times the loss rate. 1 minus this. Expectancy is 12.08 versus 935. 12.08. It's so stupid. Like stupid amazing. Frequency equals count. Actually, I already had that win rate. Frequency of that. Count if. Twenty-four times outcome equals this times this. 290% return. Pretty cool. Now remember, outcome is expectancy times frequency. There are 24 instances where this lit up and the heat map was rising. Cool. All right. Now I need to copy that down to the falling, but I have to keep things in place so they don't break. Okay, this should work. Yep, it did. So you still had positive outcome here. I mean, the expectancy was still positive. Expectancy was still positive for sure. Now, let's take this and move it over to the constituent heat map. The constituent heat map alone. Oh, frequency and base case. Good idea. Um, so Mofo asks a very solid question. Can you just give this to AI and let it figure it out? Could. You totally could, but you won't learn anything from that. at all. You're not going to know what mattered, why it mattered, how is this going to work. And I mean, it's basically just, you're asking the teacher for the answers without trying to figure out the equation to have gotten at the answer in the first place. So my answer is you could. I don't know if it's going to help you in life though. Spoken like a father. I know. All right, frequency. Frequency is just anything. Goes count. Outcome. There you go. 336. Oh, interesting. Very interesting. So your outcome here, because you had more frequency. Ooh, look at that. Now you really got to be thinking, right? If I'm only taking this 24 times with a higher expectancy, the outcome is actually lower. Win rate's a little bit higher. A little bit high. Man, this is good stuff. But your per trade expectancy is higher. Interesting. Very interesting. Okay. Now let's move this forward. Heat map direction. Oh man, I find that super interesting. Let's put a light blue. Average win's a little bigger. Average loss is a little smaller. Or a little bigger too. Win rate's a bit higher. Expectancy frequency. Oh man. Okay, let's move on. That's really, really interesting. Copy, paste. Yeah, okay, good. Now let's copy these over, adjust. Because this is now looking at A, B instead of Z. So and this. And I think I should be able to do Z with AB. It's all. Oh, and the formulas. There we go. Okay, so if you only looked at the constituent heat map alone, only look at the constituent heat map alone, 269. So it is lower expectancy. But it does help you in the falling department. Interesting. Okay. Yeah, I find that really, really interesting. Now, let's say that you had 36 instances here. Yeah, clearly it's a lot higher. Clearly it's a lot higher. So the expectancy pulls through. It's just there's less frequency. Ooh, this is fun. Okay, let's go over here. Okay. 0, yeah. Dollar channel score of 0. Okay, we gotta change to AE. Got it. Change AB to AE. So if you only went with times where the outlier channel score was 0, their frequency of 8, outcome of 85, expectancy 1065. Expectancy frequency of 8 again. Expectancy 4. So way down on expectancy. I did not expect that. Interesting. Okay, let's do this. See if this pulls through. See if this works correctly. Holy goodness. Big difference. Zero actually resulted in crazy. One, interestingly enough, was not that great. Most of the time it was two. Okay. My friend is here to pick up his kids. They were the easiest kids of all time. I didn't even have to do anything. I just hung out with you guys for a while. This could take me a few minutes, so y'all just hang out.
cash on the sidelines. I'll wait as long as it may take.
All right, this is KVT LYR. We're back. More back testing. All right, cool. So if we have 1 or 2, then the outcomes are wildly different. Wildly different. Expectancy is wildly different. But if we have greater than 1, expectancy is at 897. So this is interesting. Now we're gonna have like multiple scenarios here in a couple minutes, because I'm kind of thinking frequency 8, frequency 8, frequency of 20, expectancy 1067. Just really interesting. Kind of thinking maybe 2 is the way to go. But does that mean we have too few frequency? Because this now gets us to 2. See, if we have greater than or equal to 1, that gets us a frequency of 28 instead of 20, which gets a higher overall outcome from 213 to 251. Even with the lower expectancy, you have more frequency, it makes up for it. I get off on this so hard. This is so fun to me. All right, Q breath. Try that. See, when you have dynamic formulas, you can just copy them over and it's easy peasy. By the way, I heard y'all talking about how, well, Chris is so good at Excel. Chris is a Excel wizard. I literally am a certified nerd, Microsoft Office Specialist Master. I had to take courses. I took exams on all the Microsoft suites. So yeah, very much a nerd. AEAF. Wow. Wow, 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 wow. Look at this. Bullish Q breath. Expectancy was down. I mean, just versus 0, just a glance over. 256. Interesting. Okay. Versus bearish Q breath, 79. Okay, now we get to have some fun here. Now we get to have some fun. We can really screw around with this. This would be great. So we can build up whatever variables we want here. So let's do that. Let's say heat map, rising, constituent direction, rising. This will be fun. Y'all can throw ideas at me. Okay. Heat map rising, constituent heat map rising. Outlier channel score greater than or equal to 1. Q breath. Bullish. Now, we've got to be a little tricksy on making this formula. So we have to include all 4 of these variables. 1, 2, 1, 2, 3, 4. Yeah. Okay. So then what I'm saying is we can take this and we can compare it to like 2s only, right? We can compare this and do any value. So I think if we just leave it blank, it'll do any value. Oh, we should do, no, if we do greater than or equal to 0, that would do it. We could do one falling, one rising. We can really play around with this. So let's build our formulas for this. Start with this. Average win. Average win. Because we have to hit all 4 of these to do it. Average ifs. Y, which is that. So we won't change that. Z is heat map. That's going to be fine. When you change this value to Z73. Okay. Y greater than 0. Yes. Average win. But we also need every other column. So AB, AB2 to AB42. Lock those down. Want that to be rising. AE2, AE42. We want that to be greater than or equal to 1. And then AF2, AF42. Bullish. That should give us average win. Pretty cool. Now we just take this and all we do is flip it over. Greater than 0 to less than 0. Average loss. Win rate. Going to take a bit more work. So we'll build up the numerator, then we'll build the denominator. Okay, so win rate. Count ifs. There we go. Okay. Count ifs. Let's see. Okay, we need to change that to Z73. Okay. And basically everything we had over here. So we don't have to retype all that. There you go, 13 out of, just count this again, but take off the greater than 0 part, divided by this part. That will get you all of the instances. Take this comma out. What the frick? Oh, the equal sign as well. There we go. Win rate is 100%. I did that wrong. Greater than 0 divided by, hang on. Okay, I had that in there twice. That's the problem. 65%. Got it. Okay. Expectancy, outcome, frequency. I can copy down. There we go. Frequency, I screwed up. That's just this number here. 220. Outcome 270. Okay. So the reason that I wanted to do that is like if you like over optimized it, you can get a higher expectancy, right? A highest expectancy potentially on this whole page could be this. Let's see. And that's always the number I'm trying to maximize is expectancy. Because on a per trade basis, that's the number given enough occurrences that you can expect to get to. That's what it's called, expectancy. I care less about frequency unless it's like you just don't ever get to trade. Because this expectancy is like significantly higher. In fact, equals new minus old divided by old. It's 30% higher expectancy just by using the rising heat map. And then if we do this optimization, Z58 needs to be Z80. If we do this optimization here, it gets you to a 44 percentage point higher expectancy. So let's take this, see if it translates, or I broke something. Well, that looks good. Yeah, I think I can copy this whole thing down. Let's see what happens. Yeah, I think we got it. Cool. So if you went with 2, you went with 2 on the outlier channel score. Remember, that's right there. Your win rate is ever so slightly less. Frequency is a good bit less. But your expectancy is just a little tiny bit. Win rate is a little bit less. You don't really benefit by going with just 2s versus... This is the difference in over-optimization and being robust. Your expectancy is not any better. Your win rate's not any better. But you could do it. Could do it. Let's try greater than or equal to 0, because that'll be all instances. $270 versus 270 on greater than or equal to 1. Okay, so the reality is, doesn't matter what the outlier channel score is. Finding. Doesn't matter what outlier channel score is. For that, for this one thing. But we can play with this as well. Right? We can get real crazy. If I can copy this over without breaking things. If all the results are the same, then we're good. Okay, they are. Falling. Well, what the frick? Average win goes down a ton. Not sure why it's erroring out on this. Okay, that's fine. We'll just leave it at... Oh, because you're not finding that instance with all these other variables. Yeah, that's why. So this variable doesn't exist. There were no losing trades. That's actually what that outcome is. There were no losing trades. 100% win rate if you have a rising heat map, a falling constituent heat map with an ally score greater than 1, and bullish. There you go. There's your 100% win rate right there. It may have happened one time. There you go. It happened one time. So you never lose. This is what I mean with the over optimization that you can do. Yeah, it's a 100% win rate on the one time it worked. Okay, that's actually good. That's a fun finding. Yeah, call that guy from the trader conference. It's a 100% win rate because it happens once, once ever. And then you could write and be like, listen, I got a plan with the 100% win rate. It's only happened once, but it worked 100% of the time, works every time. That's funny. Okay. I don't feel like we need to really mess around with these variables, but let's come to a conclusion on this, and then we can move on. What's our conclusion? Expectancy rises by 29%. Let's type this out. Rises by 29% just by changing, just by having rising heat map at time of entry. Okay. Let's even type that out from 9.35% to 12.09%. Okay, cool. Now, if we optimize with rising heat map, constituent heat map, we'll put CHM for that. We found that the Atler channel score makes no difference. And positive breadth. The rises by 44% when optimized. This makes from 9.35% to 13.52%. But, and big butts, but the frequency decreases from 36 to 24 or 20 if optimized. So you trade it less often. It's a fact. It is a fact. So if I were going to do this, first off, I really want that rise in expectancy. So here's my conclusion. I want this significant percentage increase in expectancy. The difference between this, we're going to hide some here. I want that expectancy because you get, sorry, I need to zoom out slightly. Okay. 9.35. So you get, let's just round it up. You get 3 extra percentage points gains from this one change. You get another 1.5% expectancy. So 4.5 expectancy points. That's a big deal. That's a big deal to wait. But your frequency is a lot less. A lot less. Almost 50% less. So you tell me. You tell me. What do you feel? And this is your opinion. This is what I want to hear from you. So base case is the 0 scenario. Okay. Base case is a 0 scenario. Rising heat map alone is the number 1 scenario. That breaks things. Rising heat map alone is the number 1 scenario. Optimized is the number 2 scenario. So type in what you like best. Base case, number 1, or number 2. I want to hear directly from you. And you can see all 3 of those here. In fact, I'll put a big box around those so we can see. So this is the 0 scenario. Thanks, Jeff. Jeff, you're far too kind, my friend. I'm glad you're here. So Brian's asking, what's the max drawdown on the optimized plan? To tell you the truth, I don't think I'm gonna be able to calculate that in an easy fashion like we're doing right here. Let's see. 2, 3, 2, 2, 2. I see a 1. 1, 2, 1, 2, 2, 2. This will be one plan among many. So optimize fewer entries makes sense to me. 2. There's not a right or wrong answer. This is not a quiz. This is Chris just asking your opinion. Because I kind of like 1. I kind of like 1 the best, but I'm not saying I'm right or wrong. The reason I like it is because it has more frequency. It does have less expectancy, but more frequency. Pretty cool, right? Isn't this neat that we came to this conclusion? I'm really, really happy with this. We haven't even touched exits. Oh my goodness, we haven't even touched exits yet. I don't know why y'all are hanging out. Y'all got other things. Y'all have so much better lives to live than just sitting here listening to a random guy on the internet play with maths. Thomas says 1's simple. 1 is simple. That's a really, really good point. And I like the simplicity of that. Your win rate's also higher on 1. And your expectancy is higher on 1 as well because of the outcome. The outcome is higher on 1 because you have more frequency. Chiapas. Don't tell me what to do with my life. So funny story. When I worked in when I worked in consulting, right? And I'd go to the office and just doing regular things that you do in corporate life. And people would be like, "Hey, have a good weekend, Chris," or "Have a good night," or "Enjoy the thing you're going to." Every time I would say, "Don't tell me what to do. I'll have a great time if I want to." Japless, you made me think of that. That's funny. Oh yeah. You got nothing better to do. I'm on vacation in Paris. Well, it's like 6:30 p.m. Why are you not enjoying une baguette? Why are you not enjoying une baguette? By the way, sometime, Thomas, pull up to Starbucks with your family and then order a croissant. But don't say, "I want a croissant." Say, "I'd like a croissant, s'il vous plaît." The people at Starbucks, they'll laugh their faces off, and everyone in the car will be like, "What are you doing?" Like, it's the best. Oh my gosh, it's so funny. Just do it once. I definitely don't have experience doing that. Un croissant, s'il vous plaît. G Greek says, "This is great. If left frequency, and if you miss a couple, whatever reason, it makes a bigger difference." That's a great point too. Yeah, each one matters more. That's a really, really good point. Each one matters more. So here's the great part about this as well. You get to choose. You get to choose whatever you want. Now that you've seen all this data, now that you've got all the back testing in your hands, you get to decide if you're good with the base case, if you're good with number one, the number one case. And remember, the number one case is the only thing you're doing is waiting on the heat map to start rising. That's it. That's the only change. And if we go to today, by the way, that's where we are today. Heat map's rising. That's the only change. Or scenario 2, which is the heat map rising, the constituent heat map rising. The outlier channel score has no bearing on the outcomes, which is cool. But bullish breadth. That is the optimized scenario. But you won't be able to trade it as many times. So I'll let you make that choice. Me personally, I am going to go with scenario 1. I'm going to go with scenario 1. Is there a higher expectancy? Yes. But at the cost of a lot less frequency, which results in a lower outcome. Now remember, this outcome is higher. The original base case outcome is the highest of everything we've talked about here. Is the highest. But your expectancy is lower, your win rate's lower. And your frequency is more, so you have to do it more times. So it's kind of a balance. So for me, I'm going to go with this one. I'm going to stick with this. Which is just that. Everything else is exactly the same. Just that. Isn't this cool? Isn't this cool? Okay. Now, we've come up with this. Let's build a model portfolio. Let's build a model portfolio. So how would we do this? So what we need to do is we need to start with, in fact, the easiest thing to do would be to delete everything that's not this scenario. If it is this scenario, we keep it. If it's not this scenario, we delete it. So let's do this. Let's do, in fact, let me do one other thing real quick. Base case scenario 1. We're going to need this. Scenario 2. Cool. Duplicate. Scenario 0. Scenario 0. What did I call that? The model port. So scenario model port is keeping it identical to what it is. We'll delete all this out here. And what we're going to do is this. So balance. Starting balance, 100,000. Okay. Dollars. Now what we're going to do is we're going to calculate the difference between entry price and exit price. Okay. We're going to calculate that difference there in percentage terms. Just already that. And then we're going to multiply this times that percentage term and watch it grow. Ready? Equals this times 1 plus, any parentheses, 1 plus this. What in the wide world of sports are you talking about? I should divide that by 100. V divided by 100. Cool. All right. Now, because we have some blank rows, let's delete it. It's going to make it easier for copying. All right. Oh, we still have so much to do. We've been here for 3 hours and we've only done so much. We still have so much to do. Isn't this fun? Isn't this fun? Okay, so now we have the returns from the very first trade. In fact, let's do this. Let's make this a little easier on us so we can see this better. Let's do returns. It's literally taking this value right. Oh, wait a minute. I may have screwed up everything. Oh no, I think I did screw up everything. Hold up. I was using profit dollars and not profit percents. Oh no. I screwed up everything. It's okay. That does change things though. Hold tight. Hang on. Let's go back over here. Easy fix equals that a profit dollar, profit percent. That's 100% on me. 1,000,000% on me. Let's see what happens next. You're going to come to the same conclusion because we're just talking percents instead of dollars, but it will change like the expectancy numbers. Dude, I totally butchered that. Okay, let's check it out again. Expectancy 3.22 per trade instead of 7 because it was 7 in the dollars, not 7 in the percents. Okay, that's 100% on me. You can blame me for everything. But really, we're just talking dollars versus percentages. The outcome is going to be roughly the same. Wait a minute. 3.62 expectancy on scenario 1. 3.22. So it's 12% higher here. Scenario 2, 24% higher. That's a lot higher. 24% higher. Frequency still 20. Outcomes 80 versus 86. So yeah, the outcome's still higher with one thing. Okay. Doesn't change my outcome here. Still the same for me. The outcome really is that this is good. This is good. This could be better on expectancy. Changes the win rate. How could it change the win rate? Oh, I have some that are blank. That'll make a difference. In fact, let me just do the maths on these. I prefer to do that. Equals exit new minus old divided by old. S2. 28% return. Son of a gun. Like we have duplicate values. Oh, okay. Chris sees something else. Okay. Okay. TQ profit percents in this column. That's going to change things. Q's profit percents is in this column. We don't want that column. We want TQ's. Okay. That's okay. Don't worry. We're going to get there. Return equals this one. This one. Okay. Got it. New minus old divided by old. Okay. Cool. Yeah. I was looking at these numbers and I'm like, man, this doesn't feel right. I know that we had some monster wins. There you go. That's way more better. That's way more better. Okay, let's do this. Hold tight. Okay, get my numbers over here. All right, entry price and actual exit price. Got it. these values. Cool. And just to put it back in the same format, we'll do times 100. Then regular. Okay. There we go. Now that I've unscrewed this up, base case. Oh, hang on. I need to unscrew this up one more time on the original setup over here. Yeah, not 55, 97, boy. And copy those datas over. Okay, cool. So 7.01. That's exactly where I needed it to be. I knew it was 7%. We're back to that. We're good. 7.01. We took out the ones that were broken in the value zone. Okay. They shouldn't have been included. I don't know why they were. Gets our expectancy to 8.66. Okay. Now, if we add in just the rising, that takes our expectancy to 11.55. If we add in all the optimizations, is still about 1.5 percentage points higher at 13. Frequency didn't change. Number didn't change. Outcome still a little better here because of the additional frequency. And then to start over here, you're gaining about, hey, you're gaining a lot of a win rate. A lot of win rate. Average win, average loss. Your average win's slightly higher. Your average loss is slightly more. Your win rate is 8 percentage points higher, which is a big deal. That's why your expectancy is that much better. Okay, so still, the simplicity of this one, I like a lot. And it really increases your win rate. And your expectancy goes up by 33%. The expectancy is 33% higher. Your expectancy could be as much as 51% higher to do this, which is a lot higher. But at the end of the day, it's only 1.5 percentage points. So totally up to you. And again, the outcome would actually be lower. So, okay, we figured this out. We're good. We're good. Now let's do this. Now let's do this one. But first, let's get the returns right. Let's get the returns right. Why? There. And then I gotta copy that data's over. Okay, so I did the wrong one. That. Now we need our model portfolio for scenario 0. Now this may end up being the highest one, and it probably will end up being the highest one because it has more frequency. Because it has more frequency, right? 36 frequency versus 24 frequency. So there we go, 128, which is still not right. You want to know how I know it's not right? Because it should be double that. It should be double where it started because the queues literally doubled on this very first trade. Okay, watch equals the right. This is how we got to that spot anyway. Here, boom. 97.98. Now we go and we say instead of V, we go with AJ. Dang. That's life-changing money on the very first trade. Life-changing money on the very first trade. Now, let's do cumulative returns. So it equals new minus old divided by old. 97% gain. Okay. Now we need to make this formula a little different. Equals this Actually, let me just copy it down and I'll adjust it. Instead of AM2, we're going to go with a L2. Now we're up to 218. Okay, you ready? Run this down. Remember how I've said 1,000,000 times over, 1,000 times over, this is how it goes from 100,000 to 1.1 million. There's your math. There's your math right there. And that is compounding. Because, yeah, that is compounding. Now, that's the base case. Remember, this may be the best outcome. Let's insert a chart. Pretty sick, right? Isn't it neat to see, like, how we got to this point, right? All the trades that went into it, all of the wins and losses, okay? This is scenario 0, okay? And most likely, this is going to be the best outcome. Most likely. Let's duplicate this. Now we're going to go to scenario 1. Now, what is scenario 1? Only rising heat maps. Now, to make this insanely easy, all I have to do is come in here, heat map directions. If it's falling, just delete the row. Then, should have all the numbers that I need right here. There you go. Only rising. Don't worry. So yeah, I was right. Scenario 1 has a higher outcome, a higher real dollar outcome than scenario 0 has a higher real outcome than scenario 1 because of additional frequency. Because of additional frequency. But again, we haven't even touched some of these other things. Now let's go to scenario 2. Duplicate. Ah, not that. Oh, stop. Scenario 2. Model portfolio. Scenario 2 was rising heat map, rising, what direction was that? Constituent heat map. So let's go over here, delete everybody with a falling constituent heat map. Okay. We saw that the Aller channel score made no difference. And then we want to make sure the breadth is bullish. Delete the bearish. Only 2. Now, as you see, I'm doing this manually. Literally one by one, step by step, doing this manually. Let's see where it comes. Yeah, that's what I thought would happen. Has higher expectancy. But the ending balance is quite a bit less. Ending balance, 653% total gain, 763 total gain, or 900% total gain. Thomas says, so scenario 1, we have to wait 1 more year. That's okay. Oh, check this out. Check out the equity curve between scenario 0, base case, and scenario 1. Scenario 1 has a smoother equity curve, a smoother up to the right equity curve. You see that? Let's look at scenario 2. Oh, it's even smoother than scenario 2. It's very similar, but it looks to me, because of this gap right here, it's a little bit higher. And this drawdown is not as, I don't know, maybe. Drawdown maybe about the same. Interesting. The general director of Temu. Why not use a AI? Do it 100 times. By the dude, go for it. Don't let me stop you. Go for it. But you know what else? I'm gonna know the mess out of it. I'm gonna know this inside out, backwards, upside down, both hands tied behind my back, stuck in a in a box full of water, like Harry Houdini. I'm gonna know this better than anything. I'm gonna know this thing so good that nobody can ever steal it from me. Or I just ask the teacher for the answers. That literally is what we're talking about here. Dude, I'm not going to stop you. You go do it. Go do it. But you're not going to know it inside out. You're not going to know if there, in fact, yeah, you're not going to know if it made a mistake. You're going to have no idea. Mike has some really good points here. Number 1 is better because of the win rate. This is YouTube, and every losing trade is Chris is the devil. How did you know? Yeah, you're exactly right. You're exactly right. I think this is so interesting. And in scenario 1, you get to skip the ugly drawdown at the top. You get to skip that part. And it's just a smoother curve. Here, let's look at them side by side. And it's simple. You're just adding one variable in. That's it. Paste. Yeah. I got it. Insert columns. Okay. This is cool. It's a much smoother curve. But it doesn't go as high. It's a fact. In dollar terms, you are down how much? About $200,000. Got a higher win rate. You're taking less trades, less frequency, so less to do, at a cost of $200,000. So you got to figure that in. But also, let's talk about the mental aspect of those losing trades. Let's be very, very, very clear here. The mental aspect of those losing trades can F you over. Now, what do I mean by that? This is winning 2 out of every 3 trades. This is winning less frequently, of course, but you have more frequency. So where I'm going with that is that because you have more frequency and a lower amount of winning trades, you have the propensity, human psychology here. Let's say you have 3 losers in a row. This plan doesn't work anymore. This is stupid. I can't believe I ever fell for this nonsense. Yeah, especially when multiple come in a row. Yeah. But Passivo says, I prefer the extra 200K. Can you get to that extra 200K with having a lower win rate. In fact, let's do that. Let's do that. How many losses in a row? Consecutive losses. This, I think I can do this. If I go equals this equals less than 0. Did that work? Oh, that didn't work. Equals if this is less than 1, or was less than 0, give me a 1. Elsewise, give me a 0. Or elsewise, give me nothing. There we go. Should be easier to see if I do it like this. Okay, yeah, that's what I wanted. Okay, so let's even make this easier to read. Give me loss. You'll see why I'm going after this in a second here. Okay, 1 loss, 2 losses in a row, 2 in a row, 2 in a row, 2 in a row, 1, 2 in a row, 1, 2 in a row. Okay. Let's apply this to scenario 1 and scenario 2. Frequency of scenario 2 is a lot less. But interesting, you have 3 losses in a row. There's not a single point in time in scenario 0 or 1 where you had 3 losses in a row. How about that? That's so interesting. Now, of course, we haven't even touched the stop losses. Haven't even touched that yet. But let's say you just lost 13% of your account, followed by another 3, followed by another 5. And let's say of all the trades that were ever put on, you started, right, in this whole mess of trades that you could have put on, you started, this happened to be the first one you started with. You really think you're taking that 4th one? Do you actually think you're going to take that 4th one? I don't think you are. I don't think you are at all. Ooh, let's make this even more tricksy. Let's make this even more tricksy. Because this is the real outlier of the group, a 97% return right off the bat. What is the average return not including that one? 7.8. Oh, this could result in really different outcomes. This is going to result in very different outcomes. 6.2. Watch this. Watch this. Watch this. Watch this. Ready? We're going to blow some stuff up. Because this is an outlier. Fact. Equals average of everything below it. So rather than 100% return on the first go, what would it look like if we had an average return? I don't know. Let's see. Let's see. 313% overall. 370% overall. 480. Wow. Man, cut all this in half. Of course. Of course I cut everything in half. Because you literally were $100,000 not as profitable after that. Yeah, one big trade can skew the results. But you know what I see, my friend? I still see some really positive expectancy. I see some hugely positive expectancy. Hugely positive. $480 at the bottom, $580 at the top here, or at the bottom over here. And then the final one, 413. Still, dude, I really like scenario 1. You're making more money with less frequency than the first one. I'm sorry, more money than scenario 2, less money than scenario 0, but you have less frequency. So I'm good with that. What about the, hang on. How does it change the expectancy? 11.5. 11.5. Why is this 11.5? I think I need to change it over here too. Not just in AJ, I need to change it in. Let's put it right here. This will give us the number. Y. Okay. 6% expectancy, 7% expectancy, 8% expectancy. Oh, it's less than 1 percentage point difference. Okay. Putting that back. So in raw returns, absolutely. Even taking out that giant outlier gets us to a higher spot in scenario 0. Full stop. Full stop. Scenario 2 has significantly less expectancies. Scenario 1 has, well, I shouldn't say significantly less. It has a good portion less expectancy. I'm sorry, not expectancy, frequency. Frequency. Okay, so again, the choice is yours, whichever you go with. But I just find that really interesting that this one had 3 losses in the only one of these plans that had 3 losses in a row. It took out this 14% winner right here. Days in the trade. It's a good idea. Okay. Days held. Okay. This will be super easy. We'll just do this over here. $31 days in scenario 0. $37 days in scenario 1. $40 days in scenario 2. So this one does trade more frequently, as it would. There's more occurrences and shorter duration. 37 days and then 40 days. I mean, you hold your winners. You let them run forever, right? So let's calculate max. Now that we have this, we can calculate max drawdown. Now that we have this, we can calculate max drawdown. You ready? So equals max drawdown. So max drawdown is going to be the max value of wherever we are up to that point. Minus that point. Let's see if I did that correctly. Yeah, there you go. 430 to 318. So let's do the math. Equals new is old divided by old. The 26% drawdown. That was scenario 2. Let's do this again. Scenario 1. Can't believe I want to geek out like this. This is so fun. Okay. Max drawdown here, way less in dollar terms. 112,000. Nothing's even over 6 figures here. This is max drawdown right there. Where was the peak? $440s, 461. Okay, so that's the peak is 14. %19 drawdown versus 26% drawdown. Look at that. Oh, I love a good revelation. Okay, let's do it again. Are you considering 2 losses in a row? All I'm doing is looking at the balance. I'm trying to find where the max up to that point was. And then how much did it draw down from the maximum point up to that time? Up to that time. Okay. Let's do AP again. So I know somebody was asking earlier about the max drawdown. I didn't have the data at that point to do it, but now we got it. Okay. So this has multiple 6-figure drawdowns. Oh, hang on. It's got more frequency here. Holy goodness, drawdowns. A lot of drawdowns. Interesting. Okay. We gotta copy this over. Not that one. This one. Not that one. This one. AQ16. Okay. So the max drawdown was not there. Not there. It was the final trade. Oh, crap, what'd I do? I don't know what I just did. Hang on. I clicked the wrong button. Hang on. Okay. All right. B. Okay. Max drawdown here. Actually, on the very final one, in percentage terms, that was... Actually, that's the peak right there as well. 10.99. So that's a fair point. Maybe we got to... In dollar terms, this was the max drawdown, but it wasn't the max drawdown in percentage terms. Okay. See if we can figure that out. Okay, I think if I do equals this divided by the difference in just the max of everything up to that point, that may do it. If this is 1099, oh, it is. Okay, there we go. We got it. Okay. And then let's make this much easier. Format, conditional formatting, color scale. This one. Done. Now, the worst drawdowns are going to be highlighted in red. The closer you are to new all-time highs, it'll be green. There you go. Let's apply that. AQ10. %19 on this one. And let's do 20.4. I don't love that conditional formatting. Let's do it differently. Loading the red. Yeah, boy, that's better. Loading to red looks a lot better. Okay. Now what did we learn? Now what did we learn? The max drawdown equals max of these guys. Was 23% in. Oh, come on. There. Max drawdown 23% in scenario 0. AR equals max 19.1 in scenario. These lack of columns over here is driving me nuts. One column to the right. Do a bunch. Do that over here real quick. 19.4 max drawdown, scenario 1. Which remember, scenario 1 is just the heat map value growing. Scenario 2 is everything growing, basically. %. Man, that's huge. 26% max drawdown, 19% max drawdown, 23% max drawdown. Ho 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 ho. Ho 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 ho. Anybody see that? Interesting. The smallest max drawdown was the plan that I personally was liking the most, which was just changing the one variable. Ah. Going through comments here. I agree. This may be the most important video of 2026. Oh, skinny buff guy was asking max drawdown. Okay. Gotcha. Manny says he likes door number 2, which I'm assuming is scenario 1. I'm still digging scenario 1. Let's remember what scenarios are. Base case scenario 0 is exactly plan ETF as it is. Scenario 1 is plan ETF, but changing one variable, and that's waiting for this to grow. Scenario 2 is changing more than one variable. It's having this growing. Outlier channels don't matter, but bullish breadth. I see people changing from 2 to 1. Not only from 2 to 1. This is really interesting too. Not only from 2 to 1. Scenario 2 has a lower win rate. Not much. It has a lower win rate. And scenario 2 is the only one of these that we saw that had 3 losers in a row. Really interesting. really interesting. And we haven't even touched the exit side. So you know what? Because I've been doing this for 3 hours and 46 minutes, which is hard to, man, I have so much fun doing this. Time can fly for me. I have zero qualms about doing this. This is my favorite part of trading. I'm gonna go have lunch with my kids and watch DuckTales. And then I'm gonna meet you guys here for our Friday live stream. We can talk about this. And then how about next week? Maybe Monday, we focus in and only touch exits. Only touch exits. How's that sound? If you like that? If you like that, type exit in the chat. If that sounds good to you, type exit in the chat. I'd like to hear from you. As long as I'm not busy on Monday. I had a wonderfully free day today. I have 0 meetings on my calendar. The only thing I get to do today is hang out with outliers. So, okay, you guys are like, I like that idea too. I would really like to work on we haven't touched the exits, but we did come up with a plan that has higher expectancy. And let's recap. Let's even put it in here. Build a model portfolio. Done. Okay. This actually is going to be part of the exits. This is going to be part of the exits. Okay. We built a model portfolio. Now, findings. Okay. Scenario 1 of only changing the QQQ heat map to be rising resulted in the lowest max drawdown as well as highest win rate. And seriously, back up the truck right here. Remember, win rate does matter. Not just in the context of math, but in the context of human psychology. The higher your win rate, the more satisfied you'll be with a strategy, and the more likely you'll continue to use that strategy. The lower the win rate, the more dissatisfied you'll be with that strategy, and the higher likelihood that you will abandon it. It's a real thing. It's so real. So real. So, okay, cool. This is amazing. This was amazing. Get fancy and add box in there. I mean, box is just free money in between. Box is just free money. Okay. Lots of exits. Y'all definitely want to look at this next week. Yush, what's up, dude? Oh, I do have to work on this today. Here, let's I'll do this later. If I don't do lunch now with my kids, then I won't be able to have time lunch with them. And I really want to watch some DuckTales. I mean, that's the whole point of having lunch with the kids, to watch some DuckTales. Thank you guys so much for hanging out with me. We'll be in the live stream here in about 45 minutes, normal trading room time. You're unbelievable for being here. We'll talk soon.